Anastasia, your line here, inflation is a problem, but curing it means a behind-the-curve Fed will have to curtail demand. How much will this hurt for this market?
Well, I think parts of the markets are not prepared for this. The challenge here, John, is that as you guys just pointed out, inflation is starting to bite. It's starting to bite real wages. It's eating into consumer confidence. And so you already see demand that's slowing down in some cyclical parts of the economy. Take manufacturing, for example. We've seen the PMIs peak. They have come down. The new orders component is at the lowest level since September of 2020. And retail sales have been slowing down a little bit. So I think we already need to watch a slowdown that's underway in some of the consumer spending and cyclical categories. But then let's bring the Fed into equation. If the Fed wants to slow down inflation, that's going to be probably 7.2% today, they need to slow down demand. They can't build more houses. They can't issue more semiconductors. They can't build more cars, but they can start to slow down demand, which has been blockbuster for a lot of these durable goods, for example. So if they do that, however, some of the cyclical value types of stocks will have to potentially reprice lower, or at least they don't have as much room to go higher. And the reason I say this, John, is because if you look at the last 6 quarters, it's the upwards earnings revisions that really driven the upside in a lot of those cyclicals. And I don't know that we're going to see those going forward against the Fed that is hiking rates and demand that's already slowing. So that's why our call for this year has always been more subdued market returns and more differentiation within them. So consensus piled into value and cyclicals, and I think it might be time to take profits on those trades.
Well, and that rotation was fast and furious when we saw in January that dramatic rotation into value and cyclicals. Will the unwind of that be just as steep, or is this a process you see playing out more over time?
I think over the next several quarters, we will start to see this unwind. And, probably people are not as overweight in value and cyclicals as they have been technology, and the valuations have not been as stretched. So, I don't see this being a violent sell-off in these sectors, but just I think their upside is capped from this point forward. Now, you've already started to see some of this rotation take place. For example, when we look at the latest hedge fund data, a lot of hedge funds have bought into financials, as have the rest of the street as well, but they've started to take profits on those financials, and you've seen the sector maybe not perform as well as one might expect given the higher interest rates you have. And on the flip side is back to buying tech.
Anastasia, this is really important. Flat out, your research note is against consensus. When you say buy technology, go narrow there. Are you saying load the boat on Google and Amazon, or do you have another nuance there?
Well, Tom, there's a lot to do in technology.
Yes.
I look at it as far as semiconductors. I look at it as far as software. And I also look at what are the trends that we're likely to see persevere despite any sort of cyclical speed bumps. And those trends are within digital transformation. They're cloud-based. For example, we're still going to see hyperscalers spend more on cloud CapEx, for example. And we're going to see IT managers spend more on their cloud spending as well. So anything that's tied to the cloud ecosystem, whether it's the names that you mentioned, whether it's the cybersecurity stocks that help us ensure their data is safe in the cloud, I think those stocks are going to continue to benefit. And Tom, the valuations on those things have reset materially lower. I mean, if I look at the software stocks, for example, they were trading at 17, 20 times EV to EBITDA. They're closer to 10 today. So we've seen a measurable reset on that. And then I go to semiconductors, which is kind of a sweet spot of the secular growth from 5G, from the move to the cloud, from electric vehicles, and also the cyclical momentum as well. We're going to see auto production, for example, likely recover this year. So that'll benefit some semis. So I would go pretty granular in tech, but I'd also say we've seen some pretty big shifts within technology. And I think the old social media centralized models, that may not be the place you want to be in tech going forward.